Welcome to Aspire Johnson County's podcast, the Johnson County Business Insider, where we spotlight the people, projects, and policies driving Johnson County's growth. You will hear storytelling, interviews, and roundtable discussions featuring business leaders, educators, elected officials, and community partners. From this, you will gain insights into business, workforce, public policy, and community development around Johnson County, Indiana. This podcast is brought to you by Citizens Bank. Citizens Bank, serving South Central Indiana since 1931, building strong communities one relationship at a time. Learn more at www.citizens-banking.com. Today, we're diving into tax season. Common misunderstandings, what's new this filing season, and tips to make it less stressful. Thanks also to Community Health Network for sponsoring today's episode. I'm your host, Angela Vanderstein, Vice President of Investor Development and Relations at Aspire Johnson County. And I'm here with Matt Karras, CPA and partner at Compass Point CPAs in Greenwood, Indiana. Matt, welcome and thanks for joining us.
Oh, thanks for having me back.
Yeah. Matt joined us on our panel discussion last episode when we discussed employer-sponsored health insurance. Before we dive into tax season, tell our listeners a little about you, your background, your firm, and the types of clients you typically work with.
Yeah, before we begin, just note that the information discussed in this podcast is for general informational purposes only and should not be considered tax, legal, or accounting advice. The views expressed are my own and do not necessarily represent the views of Compass Point CPAs. Every situation is unique, and listeners should consult their own tax advisor or other qualified professional regarding their specific circumstances. So now that I got that legalese out of the way.
Yes, you are legally covered
I am
and protected.
Legally covered. Here we go. So as Angela mentioned, I am a partner at Compass Point CPAs. I live in Bargersville with my wife, Dory, of 18 years, my daughter, who is 9. I've served in the Indiana Army National Guard for over 22 years doing Army medicine, and now I'm an accountant. And so, Compass Point CPAs, we've been in Johnson County for over 40 years. We're heavily engaged with the community, and we serve small businesses, not-for-profits, individuals, their owners, and all across through the nation, and even we have one in Croatia. We focus on relationships, not just in our company culture, but also within our clients' families, their businesses, and the community.
Yeah. What an interesting journey. I wish you had shared that in our last episode, since we were talking about health insurance, that you were in medical when you were part of the Guard. How did you go from that to CPA?
Well, it started with me wanting to be a lawyer. Believe it or not, that's what I started out wanting to do. I went to my first semester of college, pre-law, and I hated it. I hated every minute of it. And then I realized I can't afford college because I don't want student loans. I want to pay for it for myself. And so I saw a poster that said 100% tuition paid, Army National Guard. And I said, that's perfect. I need my tuition paid for. So I called up a recruiter the very next day, and I went to basic training 3 weeks later. And but I joined for Army medicine. That's where they offer me bonuses, which, I'm a poor college student. They offer me money. I'm not going to say no to that. And so I went down the route of Army medicine, thought about doing a career in civilian medicine, did a couple semesters in college, and I hated it. It was not for me. It was not until I took my first class in business and accounting, where I loved it. I found my passion. I continued pursuing that, got my CPA license, and now I'm a partner at Compass Point CPAs.
Wow.
So it's kind of a weird little journey I took to become an accountant.
Yeah, very curvy journey there. Remind us to have you come back when we talk about workforce and students and exposure to careers and how important that is, because your story really can
I have a lot to say
help
about
it. Yeah, you have a lot to say about that. So you work with a lot of Johnson County businesses and professionals. What makes this market or community unique from your perspective?
What makes us unique? I think Johnson County, we are a growing community. We're also a proud community. I think a lot of our residents, our business owners are involved. We've been here for a long time. Mm-hmm. I'm a resident, I'm a business owner, I'm a stakeholder, and so I like to see other businesses in Johnson County grow and flourish.
Right. It's officially tax season. Some people love it. Most people dread it. And for a few people, it seems to unlock a whole lot of creativity, we'll say. So before we get serious, I want to start with the creativity. You have probably seen it all. What is the most bizarre, outlandish, or just plain funny thing a business owner has asked you if they can write off?
This is always one of my go-tos. Let me give a little backstory. There is a internal revenue code that allows for employers to provide a tax-free financial assistance to employees for disaster-related needs like housing, medical care, funeral costs, things like that during a federally declared disaster. And so they need to be reasonable and necessary for personal family living, funeral expenses like food, housing, healthcare. And the great thing about it is it's not considered income to the employee, and it's an expense deduction for the employer. It's kind of win-win. Well, I had an S Corp owner, S Corporation owner. When you're an owner of an S Corporation, you're also an employee. And so this owner slash employee wanted to build a larger deck on their house during COVID for social distancing. And it was a federally declared disaster, and he thought that a bigger deck on his house was a reasonable and necessary expense to which he wanted us to deduct. We declined, and he decided to take his business elsewhere. I don't know if another CPA decided to do it. I sure hope not, but that's probably the most bizarre thing that we've ever been asked to do as part of that tax code.
Oh, do you just wonder? Do you wish you knew who he went to so you could find out?
I do. I kind of wonder who it was and what they decided to do, or whether this gentleman decided to just do his own taxes and what came of that. And maybe he got that new deck. Good for him. But boy, just playing that audit risk lottery.
Is there a category of things people almost always think are deductible?
Yes, I think a business owner thinks every expense is a business expense. If it comes out of the business account, it's deductible. You know, if I own a car, it's definitely deductible. If I want to do this, it's definitely deductible. And that's not always the case. And a lot of people just think, but just because I own a business, my vehicle is a business vehicle. I could tell you I'm an accountant. I'm a business owner. I don't have a business vehicle.
Okay, good to know. You know, we giggle about this and the stories that you were just sharing, but it actually highlights a bigger issue. Business owners aren't trying to cheat the system. They just generally misunderstand how taxes work. That example you just gave with, thinking because I own the car, I use it for work. From your perspective, what are one or two of the most common misunderstandings you see with small business owners?
Yeah, I actually have a couple here. One is, with new business owners, small business owners especially, they fail to understand the need to pay estimated taxes throughout the year. And that's more so for those who used to be W-2 employees because their employer used to do that for them. Now they are the employer. In the IRS, they want their money. And in Indiana, they want their money throughout the year. You can't wait until April when you file your tax return to pay all the taxes. That exposes you to penalties, interest, and just owing a bunch of money when you file your taxes. The other thing I kind of already mentioned was that not every expense a business owner makes is a business expense. The IRS requires that anything that you want to expense and deduct as a business, it needs to be ordinary and necessary. And that's unique for every industry. A contractor probably needs a hammer, but an accountant probably doesn't. And so you just have to look at the industry and what your business is to know whether this is ordinary and necessary for your business. And the last thing that I see, probably the biggest misunderstanding, is the distinction between employee and subcontractor. Businesses misclassify these things all the time. They think they're trying to save money or make it easier for one way or the other. And just know that there is a correct definition, and you want to consult a professional to be able to make sure you make the right distinction so you don't get in trouble later on.
Is there any place where business owners can go to get guidelines, such as when you were talking about, they can deduct things that are considered ordinary and necessary? Is there any place they can go to say, with my industry, here's a list of what can be deducted?
Probably the best place to go, best free place to go is with the IRS website. There are a lot of publications that they post giving different examples. They give examples on the difference between employee, subcontractor. They give the example of what might be ordinary, necessary for business expenses. I don't say go to Facebook or TikTok for those recommendations. You're going to find a plethora of incorrect answers there. Don't go to your buddy next door unless they are a professional and they know better. If you want a free source, the IRS is a great source where we could find a lot of good information.
That's wonderful. Good. Which mistakes tend to cause the biggest headaches come filing time?
The biggest mistakes is one, underpaying estimated taxes. They can cause penalties and interest. And then unfortunately, I become the bearer of bad news. And some taxpayers want to blame the messenger. All of a sudden, I'm telling you, you owe a lot of money because you didn't pay estimated taxes, but you also made a lot of money. And so that's probably one of the biggest headaches that I see. And the other one is commingling finances, meaning you're using business funds to pay for personal expenses. I'm not a lawyer, but I could tell you that if you're using your personal expenses, you could potentially pierce the corporate veil where you lose your protections of having that business. It takes a lot of time to decipher what's business, what's personal. Time with an accountant means more cost, more money for what you're spending. It can create audit issues, and we could also miss out on legitimate expenses. If I see a whole bunch of expenses that are personal and I start taking things out and moving it over and misclassifying things, I can miss something that might be a legitimate business expense that looked personal because it's surrounded by a bunch of other personal expenses.
Do you see similar misunderstandings with W-2 employees, especially people with bonuses, side income, or a recent job change?
Yeah, the misunderstandings with W-2 employees typically revolve around withholding. They either think that they get their bonuses are going to get heavily taxed, and so they're paying a bunch more taxes on their bonuses. Well, that is not true. They may have more withholding on that bonus because they made more money during that period. But that at the end of the day, the taxes are the same on bonuses. It's all taxed as ordinary income. It's all taxed at the exact same rate. The other one is for dual income families. When you have two spouses working, the other's payroll provider doesn't know about the other person's payroll wages. And so the withholding that you may have on your wage by itself may be appropriate. But once you stack it on top of each other with your spouse's income, now you're under withheld. Now you could potentially owe a bunch of money. And then with the One Big Beautiful Bill Act, there's that new beautiful thing that I've been hearing all about. No tax on tips, no tax on overtime. Everyone thinks it's the biggest craze. But before we start planning around everyone starts planning around the tips only pay system or retirement, I'm going to do a quick reality check on the so-called no tax on tips and no tax on overtime provision of the One Big Beautiful Bill. First, it's not really no taxes. Payroll taxes still apply. There's Social Security, there's Medicare. They still want their cut. Second, there are limits on how much you can deduct, and there's also income thresholds. So yes, there is some relief, but it's not free for all. It's not a loophole, and it's definitely not permission to get creative with reporting. As always, the details matter.
Yeah. So they should have been better with the word they use. Instead of no, not as many.
Yeah, it's a no income tax on tips. There's a very specific word missing from that, but it doesn't sound as sexy.
No, it doesn't.
So the no tax on tips is a lot more fun to say and hear.
Hey, let's talk about this tax season specifically. Without getting too technical, what's one thing people should be aware of this year that could actually impact their return?
With all the changes that came from the One Big Beautiful Bill Act, payroll providers, banks, finance companies, investment firms, your accountants, they're going to need extra time to ensure that they report everything correctly. And so don't rush and file too early. This can lead to not reporting all the information or inaccurate information, which can lead to audits or the need to file an amended tax return. So I think the one thing you should be aware of is patience is going to be key this filing season.
Do you anticipate any extension of deadlines?
I don't. The extension of deadlines, that only happened during those COVID era times when we had that. And then some states may have that during state declared disasters. I know California had that during the wildfires and things of that nature. But as of right now, deadlines for flow-through businesses are March 15th, and individuals and C corporations are 4/15. Not-for-profits 5/15.
Okay. Let's end with something practical. If you had to give 3 tips for making this a smooth and less stressful filing season, what would they be?
Ensure you have everything before you start to file. If you use a tax professional, ensure you provide them with all the information, including all pages of documents received. I can't tell you how often somebody provides me a brokerage statement and I get page 1, but not pages 2 through 57. Pages 2 through 57 also have important information that your tax professional is going to need. Ensure you have good records that substantiate any deductions you're wanting to take. If you don't have good records for 2025, we're only 1 month into 2026. Start 2026 on the right foot and start having good documentation, whether that's tracking your mileage in an Excel spreadsheet or an app on your phone or a piece of paper in your car. Start those good records now. And then lastly, be patient with your tax professional. There are a lot of changes that have delayed the release of software updates, document releases, and guidance from the IRS. We don't want to rush your work at the expense of accuracy and completeness. CPAs, they're retiring and smaller firms are being acquired, leading to a lack of availability of qualified CPAs with no decrease in workload.
Sounds like patience is the word of the season.
Patience is the word of the season. That's right.
All right. All great advice. Thank you, Matt, so much. But I want to ask this question. You've given great advice for making tax season smoother. Do you practice what you preach this time of year?
I do. I do keep good records, but I could tell you that I extend my return every year. I am not the first one to get my return done. I'm usually one of the last ones to get my return done. That's just because I need to get my clients take priority over what I need to get done. And to be frank, a tax return is just a piece of paper. It's just compliance. It's just already reporting what already happened. Any good tax planning, any good solutions around taxes happen throughout the year. They don't happen in March and April.
Oh, that's good to know. Well, thank you so much again for joining us, separating fact from fiction as tax season gets underway. I am going to ask one more question. After years of doing this, what does tax season actually look like for you? Is it structured or is it just organized chaos?
It is organized chaos. Every year I ask myself in April, what was I thinking? But I enjoy what I do. I really enjoy the clients that I work with. I enjoy the people that I work with. And it's just an overall rewarding career.
And remember those industries that you did not love when you were in them.
That's right.
Yes.
That's exactly right. Yeah. Law and medicine. I love you people. It's not for me.
All right. And to our listeners, if today's episode raised questions, now is a much better time to ask them than on April 14th. I want to again thank our wonderful sponsors for helping to bring this content to listeners. Aspire Johnson County Business Insider Podcast is presented this year by Citizens Bank. Thank you again, Matt Karras with Compass Point CPA, for being with us today. That's it for this episode of the Johnson County Business Insider. I'm Angela Vanderstein. Please join us again next time.